Welcome to TradeTheMBI.com. This is John Supporters for the 2nd of February. Well, it continues here in the pre-market. At least we had a much deeper dive that hit the 61, came back, and it's off MBI White leading. Still not a horrible situation. I mean, yes, there's been weakness throughout this. We didn't get the dip of DOC, orange below the red. So even when the crossover came, it's kind of what I call that no spark, because you're in that no spark zone of negative 13 to negative 7 here. And that just typically produces lackluster anything, no real momentum to it. And that's kind of what we're seeing. You just, they're waiting for new money to come in or a feeling that there's enough of a discount. You've had the tensions, is the U.S. going to attack Iran and all the other this, that, and the others political, machinations of, shut down, blah, 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 blah. It seems like most of that's going to get averted. That will be enough to keep things somewhat stable. But you're in a period where there just isn't a whole lot to drive things. You've already pre-caught most of the run of everything in the expectation. Now, your bigger risk is the fact that you're not going to meet expectation in 90% of the cases, and that's what's going to lead to more weakness. Does that make it a sell situation? Not from a broader standpoint. People are still going to be looking for discounts to buy into because new fund money is going to be coming in here shortly, and they're going to see this as an opportunity because we've got a nice discount from where things were. So, there's always that view. Of course, some people would say it would be a lot bigger discount, if things don't go well, particularly when you start to see headlines with Oracle struggling with the financing. And this gets into that whole AI loop situation of them investing in each other, and it looks like they're all this money's going to be coming in, but it all depends on OpenAI coming up with $100 billion or more to support it, and they're not making that kind of money yet. So it's you know, revisit of WorldCom and all that all over again. So you can see you don't have a huge short interest from that standpoint, but you certainly don't have buy configuration built into that, and that makes supports very weak. Nasdaq has been unable to be in a positive shakeout since last November. Think about that for a minute. Well, actually, we had this brief period right here for like a couple of days in December, and so that just literally lower highs didn't do much for it. Um, but it hasn't resulted in a massive sell-off because economic investment, things like that, still look fairly decent. You just have this bifurcation in the economies. People aren't feeling the same effects of it because inflation had wreaked a toll. The only way that was going to salvage that was a deflationary spin of lower energy costs. It didn't happen. Fed certainly isn't doing much. I mean, they're not really going anywhere with that slow rate move. It's still too high for most people to benefit. But if you go much lower, you're only going to make that disparity between the haves and have-nots even worse. This was a big help. The view that there wasn't going to be an attack on Iran, easing oil. Doesn't matter. It's still not enough. You never broke down below enough to really aid things. Is going to create a little bump in inflation near term. So the goals of getting under their target range and then not happening. The strangest aspect of the whole dollar beatdown because Trump tariffs, blah 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 blah, has been a strange move on the euro because at the end of the day. The U.S. is so far outproducing what the eurozone is doing is not even funny. So why is there any interest in the euro? Well, it gets back to the whole debt issues of the U.S. and where else do you put money? Well, the whole thought was you could go into commodities, and well, yeah, we warned about this one. Those positive extremes get filled. Okay, so boom, there it is, filled, nice and clean. Is that a shock? No, we knew this was a parabolic run. The only question was, how long it could sustain itself before starting to fall apart. We saw the weaknesses of it begin a little bit earlier back in the week. We had gotten into a super extreme situation here. Now, that said, look at this. This is a steal from minus 31. Well, yeah, once it gets above negative 13, you've got a complete refresh. That's a complete new buy setup going in there. So is this a momentary dip? Yeah. Was it necessary? Does it take off a lot of the pressure? Absolutely. It makes it a lot easier to move from here now that you've filled that back in. But look at the difference in that one day to clear out, over a week's plus worth of trades. That's the way it works. Now, the critical one for this is people are having to liquidate their crypto assets in order to fund, the margins and those things that they've set themselves up in commodities. And this is where, as I've described it before, these are vehicles for parking money that you may need later on. Instead of keeping them in cash equivalents that aren't paying you nearly enough, gave you exposure, but they're really putting a crimp on BTC in that, and really just hasn't been much of a buy setup since this. Once we broke down from the peaks right back here and went into negative shakeout, you had this brief moment, you hit the 50%, and it just couldn't do anything from there, and that was a rejection. It's like boom, and it was sub 100 at that point as well. So, yeah, real problematic. Now you're down to the 74 range. I mean, we could shrink it to find if there were positive extremes going back, but none of this is that big a surprise. ETH mimicking, and again, I'd have to shrink the chart now because, this has been a return just to fill back from the breakouts way back here. It had already done it back in December, so it was sort of a moot point at that point. But now you go all the way back here to, before June, 25, and you're getting close to that area. And so all this, excitement literally wiped out. It took some months, but again, it's just a reflection of, where people have to allocate in order to survive the situation. And, this is a broad one, it was even mentioned on our group chat. It's like, yeah, when you're in a malaise period where a lot of the best information has already been bought and paid for. Now all you've got is, can you meet those expectations? And the reality is, it's a tough sell. I just don't see how they're doing it. And the fact that they haven't been is why we've been trading across. However, you do have promising things on the horizon, so it just depends on your time frame, and that's why we're getting these larger ranges, but within the bound condition that we have. And that was our expectation for the volatility in that, because you have different forces working in different timelines. When we look at it from a super intraday, you can see Friday's action was mostly about option situation. Drove it down early. When the put started getting valuable, they flipped it to calls. All those call buyers coming in at the end of the day, and then boom, over the weekend. Yeah, this is what happened to them over the weekend. They're going to get wiped out and wake up to disaster from the Asian session, but the European session, they've been trying to lift everything back up, and they've got it back quite a ways. Will it be enough by the time the U.S. Open? No, but this is part of that, rebalancing, and those who get caught on the exuberant side of everything always get burned. That's the whole point. Bulls and bears can, eat well, but pigs get slaughtered, and that's just been the story always. So nothing's changed. I don't see this as big excitement, but yeah, if you can't see these moves from the indicator standpoint, yeah, it's problematic for a lot of people, and that's why they're getting hammered so bad, because they don't have a direction, and there is no trend at this particular stage. You're just in sideways action, and this happens. People forget, but back in the 90s, this was a common thing where you just had a slow ebb back and forth, but just a continual climb. Anyway, that's long and the short of it for now. The indicators have gone out for February, so you're going to need them, because without them, you're going to be world to hurt. Trade well. Have a good one.